Coming up today, stocks close lower. China places demands on America. The masses rush to buy gold. Oil continues to drop. Regional banks get smashed. And the market is on edge after the number one crash signal just triggered. It's getting dicey out there today, guys. Let's go. And never a dull moment in global financial markets, that's for sure. With things definitely getting spicy out there today. Bit of a sharp sell-off. And high beta stocks, crypto, along with financials, regional banks down really heavy today. Bonds up along with gold. As the melt-up continues for the precious shiny metal, we're starting to see some records out there with volume and the amount of participation, like I'm about to show you, happening all around the world. People lining up to buy physical gold everywhere. As we're definitely getting some big moves happening across markets. US bond yields sliding, with the 2-year taken out yearly support today, even lower than the April lows. Crude oil as well sliding, down at $57 a barrel. The regional bank sector ETF down a whopping 6.2% today, as Zions Bancorp said that it had taken a $50 million charge to cover 2 loans. Not a huge amount on the surface, but it is enough to spook fears across the sector, with even the large cap financial sector fund coming off hard today, almost 3%, even though we just got a batch of really good bank earning. Bitcoin as well continuing to slide, sitting at a support zone here. And the new meme stock ETF off really hard today, 9%, along with a continued steady climb in the VIX index, actually closing at 25. That's quite elevated. And like I pointed out yesterday, the VIX term structure had flattened, was on the verge of going into backwardation, and that's exactly what happened today. The front month VIX futures contract now above the second month, meaning the options market is expecting high volatility right now this week. Going into the weekend, Fridays can always be a little dicey, and next week compared to what they're expecting next month. And looking back in history, that is the number one signal we get before a crash, because every time the market has a sharp correction, the VIX term structure has gone into backwardation first, like we saw back in late March before the market really came off hard. We've also got a massive spike in gold volatility. Option dealers quickly marking up their implied volatilities, even though the price is rallying hard. And so typically you see volatility spike when assets crash down, but when you see volatility spike while an asset is ripping higher, that's the market pricing in a big correction around the corner. But just looking at the total setup across markets, gold up, bond yields off hard, oil off hard, some issues with regional banks, high beta stocks coming off hard. What exactly is the market worried about? Because it's not inflation expectations. They've actually been coming down these past few weeks, looking at the spread of tips. And it's not geopolitics either, because Trump just brokered the historic Middle East peace deal, and we just got news of a possible Russia-Ukraine peace deal being done in the next few weeks, as Trump just had a long conversation with Putin over the phone, where it seems to be they could be coming together, most likely in Budapest, Hungary, as confirmed by the president there, preparing for a USA-Russia peace summit. So again, inflation expectations and geopolitical tensions are actually cooling down, so that shouldn't be the cause of this massive gold rip and spike in volatility. Or is it the market pricing in the US and China trade tensions could continue to escalate? We have heard China say they're open to talk, they want to work with the states, but we're getting some mixed signals, with China accusing the US of deliberately causing panic over rare earth controls, as they think they should be able to cut off the West from rare earths and we should just shut up about it. They also called on the US to immediately rectify wrong practices in trade, which is a comical claim to say the least, as China clearly has the most egregious trade practices among any developed nation in the world. But again, the market is still pricing in a 71% chance that we will get a US and China tariff agreement by November 10. Doesn't mean it'll be a final formal agreement. It could still be pushed forward another 90 days, for which this market would resolve to yes. But that's still materially higher than 50%. No doubt it's come off a lot since last Friday, but we've actually bounced a bit since then. And yes, poly markets are far more accurate than anything you'll hear in the media, with a huge 91% accuracy a month out. In other words, the favored odds for a poly market are right the vast majority of the time. But in another alarming signal, we got Jim Cramer coming out today saying this is very bullish, China accusing the US of deliberately causing panic over rare earth control. As it already looks like the famous October volatile seasonality is playing out, with the VIX spiking up the highest since the tariff tantrum. And with the VIX term structure now in backwardation, there is the possibility for this sell-off to accelerate going into the weekend and next week. There is no doubt a lot of hot money having accumulated in the market these past couple of months. There's definitely room for more selling here in the short term. So is gold really the flight to safety trade right now? Apart from bonds, it's really the only thing that's ripping this week. Well, like I pointed out yesterday, we are seeing some extremes in positioning, sentiment, and technical indicators that often coincide with market tops and bottoms. Everything from the value of call options in gold ETFs to fund flows. And now we're getting interesting reports like this one. Japan's largest gold retailer suspending sales of small bullion bars for at least a month, unable to meet the frenzied buying interest spurred by the metal surge to record highs. And they make memes about this kind of stuff, as nothing influences most people's minds like price action. Recency bias and crowd bias, the fear of missing out FOMO, is a human trait that was around 1,000 years ago and will still be around in 1,000 years from now. As this meme's actually playing out in real life as I speak, we're seeing long queues to buy physical gold all around the world. This one here in Hong Kong, a frenzy in Vietnam. People rush out to get in on the live action. Even Australians as well are queuing up to buy physical gold. Are all these people correct? And is now the time to pile into gold? Is it cheap? Will all these millions of investors turn out to make a profit? Or could we actually be closer to a bit of a top? What happens to gold if Trump can broker his 9th peace deal, bringing an end to the war between Russia and Ukraine, pretty much ending the last major conflict in the world right now? What happens if inflation keeps trending lower? What happens if the Trump admin can continue making inroads on improving the huge budget deficit? As we just got a record surplus for the month of September. In other words, the US government took in $198 billion more than what it spent, with $30 billion in tariffs, also helping out the picture. Again, it's not geopolitics, it's not inflation concerns, and of course the long-term fiscal picture on America's debt and spending is still of concern, but right here in the short term, this is a great signal, as this government's actually cutting down the number of federal employees that as of last year stood at almost 1 in 5 Americans working in government. Or are we going to see more trouble with small bank like we did in March 2023? A couple of quick digital bank runs. The Fed had to get in there and backstop them. But they're way out in front of these issues this time around. So if we need to see the Fed put, no doubt we will. And $50 million loss is not even a drop in the bucket of the US banking system. So it could just be fears at this stage that are yet to materialize. Because otherwise the large banks are still very healthy, coming through with very good beats. Bank of America yesterday, 11%. Wells Fargo, 7% beat, and JP Morgan beaten as well. If there were fears over something spilling over with China and Taiwan, we'd likely see Taiwan semi-stock not just trading a few points below highs. They also coming through with a healthy beat on earnings today. And Nvidia as well, which actually finished up today, would be selling off hard if the market was worried about China taking further action against the most risky part of this whole trade war, and that's affecting the semiconductor supply chain. And Chinese ETFs as well have held up pretty good this week. And so even though we don't have big new material developments in US-China tensions, just a bit of back and forth rhetoric, I do think it probably is risks to the US-China tension spilling over further as to why volatility has climbed sharply this last week, as it was only this time last week we were down at 16. But no doubt, looking at the meme ETF, it could just be a bit of froth and profit taking as well. A lot of these hot stocks may have got a bit ahead of their skis of late. Just like I pointed out yesterday, a number of these stocks showing exhaustion signals on the chart, quite a few of them pulling back hard today, which could still have a further few days to go before we come back and touch moving averages. And unless we do see a big new material development in the US-China trade war, any further pullbacks in the market should overall be bought because the Fed's still on track to cut rates. They've mentioned slowing down quantitative tightening to keep liquidity and money markets flush. I think we're highly likely to have a great Q3 earnings season. Bullish seasonality coming out of October, going into the end of the year. We may just get a healthy 5 or 7% pullback in the market, take us down to the bottom of the volatility bands here, where I do think, like I said, unless any new significant development occurs between US and China, that the dip should be bought, because it has been quite a few months since the market has even pulled back more than 3%. So in that case, it's probably a healthy move, get a bit of consolidation, and then we could very well set up for a nice Santa Claus rally. But barring any new positive news, maybe the Trump put coming into effect tomorrow, if we do start off weak, don't be surprised if we can see a sharper sell-off going into the weekend. Fear and greed index just moved into the extreme fear zone. That's typically when markets are sliding, but that's also where markets bottom, is when you see sentiment and positioning go to extremes. I still think there's plenty of room for an unwind. A bit of a flush out of weak and highly leveraged hands out there as well. We already kind of saw that in crypto on Friday. Record amount of liquidations, and also these exhaustion patterns we're seeing on the charts. And like I said, the risk-sensitive cryptos trading a bit heavy below moving averages, with Bitcoin actually sitting right at the 200-day moving average here, 107,000. Otherwise, overall, credit spreads are still quite low, and so I'd expect the banking sector to maybe find support tomorrow or next week if we were to trade off lower. Because apart from these small losses in a few regionals, the banking sector overall is quite healthy. And no doubt, gold is in a strong rip here, as we're now starting to see mainstream everyday people, not like you and I that follow finance closely every day, starting to literally line up and buy it, just like the memes. But I do think we're on our way to a bit of a parabolic blow off top, as it's very rare when you see mass crowd buying and fever in any market, that all those people turn out to be correct when you fast forward 6, 12 months. I think it's highly likely gold will be lower. And once again, like I said yesterday, that big red candle from Friday is still in play. We very well may take a run at the lows tomorrow or early next week, and my oscillator still definitely has room to come off lower. There's still plenty of room to go lower before we get those deep technical oversold levels where we typically find a bottom. And so like I said last Friday, I think 6,400 would be a good target, and barring any new big surprise, could be where the dip gets bought. Because if we do see a new peace deal between the US, Russia and Ukraine, and the US and China are able to come together before November 10, even though they may be posturing going into that, they will hopefully meet in the middle somewhere, but it's really China that has to make some concessions and show a real willingness to join the rest of the developed world and play on a level playing field, which they currently do not. So if all that goes through, inflation stays down like it looks like, Q3 earnings come in good, there's no reason why the market can't quickly find its feet and we could get a nice Santa Claus rally. But it's certainly possible we could get a VIX spike above 30 before that happens, with a nice little flush out, clear out some excesses, and like history shows, whenever the VIX spikes above 30, that's typically a good buy the dip opportunity. That's all I got for you today. Thanks very much for watching, and let's see what happens tomorrow going into the weekend. Cheers.